In this next segment of my video with Lee Brickey, I wanted to go over the rent versus own, how owning a home is a wealth strategy that should be considered. And should you buy right now? What's the home affordability index right now? And how can we learn from what's happened in California and their growth 30 years ago and what's happening here in Florida? We're going to talk about these topics and more, so stay tuned.
So let's look at the rent. You can see where rent is dropping. It's moving down. So again, lagging indicator. So rental prices are coming down, which is good for younger people that need to rent because rents were so high and then mortgages are so high. It was really causing a problem. So shelter coming down with rents. I think that's a good thing right now. In some states, California right now, a lot of places it's going back the way it was. It's cheaper to rent than it is to buy. And depending on where you are in the market, could be the situation for you too.
Yeah.
In Florida,
Yeah. Having come from California 13 years ago, I can tell you that was normal. It was much less expensive to rent than to buy there. I mean, it was really pride of ownerships, and you're thinking it's a 20-year deal when you go in. So
exactly.
It makes sense. Yeah.
So here's market expectations for the Fed. This is from Charlie also, where this is coming from the Fed though. So they're expecting 2025, the Fed's fund rate to be somewhere around, 3 3/4. So where are you at on this?
Mortgage rates tend to hover about 1.75 to 2% above this in recent years. So I would say this is a pretty good estimate as to what's going to happen, because like I say, it's going to be a little bit of a topping out here, this over the next several months. And then we're going to see as the Fed funds, start to be cut. I don't know if they're going to start cutting them. I think they're going to hold them up higher. But the mortgage market is going to anticipate those cuts that are coming because they don't wait for them. They look at inflation. They look at all the retail sales slowing down. They look at the jobs market. They look at everything as it comes out throughout every week. Multiple reports coming out, and it's already indicating that they're going to go with lower rates, or rates are going to slowly go down. It's a choppy ride, but it's coming down. All right.
News. So here's the bad news. When rates were 2.65%, this is based on a 20% down 30-year mortgage at property tax at 1.25%, which Palm Beach County is 1.6%, Port St. Lucie's 2%. Martin County, where you are, is actually the cheapest. It's under 1%. It's 0.98%, I think. 5% for homeowners insurance. If you're buying anything under 5 years old here in Florida, you're going to get the best rate. So we'll talk a little bit more about that down the road. And then no HOA due. So a $750,000 home would have cost you $3,000, and today it's 6.95%, where we were just a week ago, right?
Right.
That same 3,000 is buying 444,250. Where are rates at now, Brent?
Yeah, we're in the 6.7, 6.8 range right now, starting to moderate. So that's a good thing. The choppy ride down we talked about earlier, we're going to see that continue. There'll be days when it's up and days when it's down, but generally speaking, what we're seeing is individuals are frustrated because of the prices they have to pay now and the higher rate. When the rates come down, though, of course, you don't necessarily marry at their interest rate. You're marrying the property, and so the opportunity to refinance is probably 18 months down the road.
Right.
That's the way I see it. You're going to see rates probably in the low 5s.
When we're going to get more into this in a minute, but if you're a first time buyer, me personally, I think it's a great time to get in the market. Just not get so picky and find yourself a home so you can get involved with the equity as the market turns and starts to move up again, which in some markets it is. I mean, we're going to talk about that when we go through the CoreLogic report in a minute. But right now we're seeing investors dumping investment properties, especially overseas investors, and then investors trying to get in the market and pick up some of those properties right now before things get wild again. If you're in the market and you're on the ground every day, you know that there's a ton of people sitting on the sidelines. So let's move on. So here is the real problem, and that you were just covering, is prices are still up year over year nationwide. We're at $383,750 for the average home price in the US, and probably pretty close to what it is here in Florida. So In markets like Port St. Lucie, where the market's now running anywhere between low 300s to the millions now, you're seeing that the lower end properties are still selling and actually getting multiple offers on them. And then when you kind of go above that 450 mark, it slows down and you're not seeing that much buyers in that market because the rates are so high and the houses are still so expensive. But this is just a supply and demand problem. And it's something that you and I have been touting since this whole thing started, that unless supply builds, there's no way for a crash because there's just no inventory. We are seeing some price decreases in certain markets. We're going to talk a little bit about that, but this is the problem. Housing is still very expensive nationwide and especially in Florida. And now we got rates so high, it's really created kind of a weird situation.
Tremendous amount of pent up demand, though. A tremendous amount. So many people are just sitting on the sidelines waiting for rates to drop. I mean, it's something everyone's pretty much aware of, that, they cannot raise interest rates like this and keep it for a, suspended period of time. And it is cyclical. I think that most people, understand that.
Builder sentiment's up again this month, because builders are just building like crazy because there's no inventory.
Right.
We're seeing that in our business. I mean, we've sold everything still. I mean, we sold 4 in the last 2 weeks, new construction. We barely have any clients on the resale, and anything we're getting, and you can speak to this because you're doing the mortgages, is in that under 450,000 market. But then you're doing some of the mortgages on the new construction because of your relationship with Mattamy, and you're seeing it. The prices are much higher there.
Right. And I think there's a difference, especially with Port St. Lucie, Lee. We're seeing there's a big difference between East St. Lucie and West St. Lucie.
Exactly. A big difference. So here it is right here. If you look at this is top markets risk of home prices decline, and CoreLogic just put this out when a few of my clients have asked me about it, especially in investors too. So you can see Lakeland, Winter Haven, Florida, Sarasota, Northport, Sarasota, Cape Coral, and then Port St. Lucie, right? I would agree with this to a point. So boots on the ground, friends of mine working in these other markets on the West Coast, my son being up in the Winter Haven market. There is all of these markets you're seeing here. I don't know about Utah. I'm not up there, but I would say that there's probably a fair amount of new construction there too. These are markets in Florida that have a lot of new construction. Fort Myers has a lot of new construction. Sarasota and Port St. Lucie, tons of new construction. And that's what's hurting the market. We've let a couple of listings go in Port St. Lucie and here in Palm Beach County this year because our clients just aren't willing to take the hair clip on them. The market's going to come back eventually and the house is going to be worth what it is. But if you want to sell a home right now and it's above that 400 mark or 450 mark in Port St. Lucie, above 500, 600 in Martin County, and above $1 million in Palm Beach County, unless you get up into in these markets up into the multi-million-dollar real estate, the oceanfront, 10 million, that market, $20 million. That market's still moving because of the money coming into Florida, but these markets, there's a break in them. And that's, I think, because of the new construction and because of rates, it's hurting the kind of that center part of the market in every single county that we work in. I've seen prices come down because people that need to sell their home, sellers that need to sell, are going ahead and dropping that price where the house might be worth 610, 620, and they're going all the way down to 580, 590 to sell that house, and going in and taking the hit on it, where because they have equity in it and they can. But other folks that don't need to sell are either renting their houses or just staying in them.
Yeah, the prices you just mentioned, Lee, I think it's important to point out too, as far as prices going down. A lot of times what I hear is, I think we're going to have another 2008, things like that. and we're not talking about 50% price declines. We're talking about
No,
5,
we're talking about, 10,
5,
20,
7.
30,000 max. And,
Right.
and, and I think that's a short-lived situation because
Right.
again, like you were saying, there's a difference in Port St. Lucie. There's Westport St. Lucie and there's Eastport St. Lucie. And on the MLS, they've actually split it because in Westport St. Lucie, that's tradition, which could be its own city. And that market is moving and prices are holding steady and going up, where you're seeing in the East Port St. Lucie, which is the older part of Port St. Lucie, those homes are, you're seeing the price drops over there, or people are just taking their homes off the market. So inventory is very low. And so when you're looking at for a home and you're a first time buyer, where are you going? You're going into that under 400,000 mark, right? And that market is moving. Same way here in Palm Beach County, under, under 900, under $1 million, 900,000, you're seeing people buying homes. So I think this is a very short-lived situation, and I'm not the only one, because Shark Tank's Barbara Cochran predicts housing prices will go through the roof. We could have a COVID market again. And anybody that knows Barbara Cochran and has listened to her, she's not an idiot. She's very smart and she knows what she's talking about. And if you listen to this, this is something else that we've been saying for a while. If you can afford to buy right now, it makes sense. If you can't afford to buy, don't get yourself house poor, stay in the rental. I mean, I'm telling my son that too. So, and you are too. You're telling your kids that, because rates are going to come down. But she says right now sellers are staying put, but they're not going to stay put if interest rates go down by 2 points. It's going to be a signal for everybody to come back into a buy like crazy, and the house prices will likely go up 20%. She said we could have a COVID market all over again. I don't necessarily think that she's off. There's a ton of people, and especially in markets like Florida, where we have still people moving to Florida, still coming in to the state because of jobs. They're going to, and in the growth we're seeing in different cities like Orlando, for example, which had no real industry except for the theme parks, is now got aeronautics and medical and all, and even tech companies moving in and brokerages moving in. You're seeing that because Tampa's filling up and there's no more room there, and it's gotten very, very expensive. And we're seeing the same thing happen in Palm Beach County and Port St. Lucie area and Martin County, just the Treasure Coast as a whole, where it's growing like gangbusters, and you're seeing that happening. And there's actually real jobs coming into that city for the first time. And still you're close to, 30, 45 minutes out of Palm Beach County, where you can work in Palm Beach County and make that drive back and forth and save $1 million on your home.
I do hope this information helped you out. If it did, be sure to subscribe to our channel and hit that notification bell so you won't miss any of our upcoming videos. And check the next video out too. We look forward to seeing you in our next video.